All righty, here we go. Let's rock and roll. So, hey everybody, how we doing? Hello and welcome to the CRE News Hour, a weekly podcast where we come to you live at 3 p.m. Eastern Standard Time to discuss all current events and everything commercial real estate. My name is Henry Eisenstein, and I'm here with my co-hosts Rafael Collazo and Chad Griffiths. How do you doing, gentlemen?
Doing great, guys.
Doing
Excited to
really
have
good.
Chad on board full time. It's great, man. I'm excited to the added dialogue.
Yeah,
That's right.
glad to be a part of it. I love talking about commercial real estate. So anytime I have an opportunity to do so, I jump all over it. So it was a natural for me to accept the invitation. I really do thank you guys for bringing me on.
Of
Yeah.
course, we love your insights, my man. So, Rafael, where would you like to start today?
Let's go ahead and pull up. Let's go ahead and pull up this one real quick for you guys.
We've got a wide array of different articles today. And there's actually some news looming in regards to WeWork, which hopefully we get to that article at the very end. We've just been following that since last almost two, I guess, what, a year, 2 years, or whatever.
I actually have my WeWork coffee cup.
Oh, nice celebration!
Coincidentally enough, yeah,
Yeah, I'm excited to have. Yeah, I'm excited to have a dialogue on that for sure. And really, so to start off today, what I thought I'd do is just kind of talk a little bit about consumer trends and how they're driving retail. As you guys know, I do a good amount in the retail space, so I feel pretty abreast about trends in the market, especially here regionally. But here's just some of the national trends that they're starting to see. Last week I think we had an article that kind of highlighted the differences between what Dollar General is doing versus Family Dollar. So obviously Dollar General is still actively expanding their footprint across the country. I think they're trying to shoot for 20,000 stores uh, uh, throughout the country. Aldi has made a big push in the market, which I think is great, just to increase competition for a variety of different grocers. Hopefully that leads to more, affordable groceries all across the country. Walmart and other concepts as well are starting to try to get more, modify their footprint within the space and coming up with new layouts and different concepts. So that's obviously going to be very beneficial. There's also a lot of newer, not necessarily newer concepts, but these convenience store / gas station chains. If I know Chad in Canada, I'm not sure if they have a similar type of concept, but there's a concept here called Wawas, which is especially very popular in really the Southwest and East Coast area. And there are these pretty large convenience stores that also are gas stations as well. So they're just well known, and people will go out of their way to go to these stores, and they have additional thing that draw them in. So they have like food that they offer that's unique to that particular location.
I'm a big
So,
Wawa guy. Wawa guy. I will pass 10 gas stations to go to a Wawa.
Exactly.
Okay?
Exactly. It's has like a cult following, so it's kind of cool to see that be the case. And for whatever reason, I don't know, I still don't really understand, but a lot of these take fives or oil change concepts are super popular. You see them being traded all the time on the triple net investment market. Auto zones, that sort of thing, are also very popular, and they're continuing to expand. So, and then also the fitness type of concepts have been really active, especially as you start talking about, the higher price point per month. It just seems to be ones that are continuing to increase their footprint. I think it's just more people are being more health conscious, especially the younger generations tends to be a little bit more health conscious. So they're typically consuming products that are more quote unquote healthy, and they're going to the gym more, which is a good positive trend. But again, it just kind of leads itself into, the demands for retail. So I thought I'd just kind of open it up to the group and kind of get your all's thoughts on it.
yeah. We don't have those big stores like that in Canada, although it probably do quite well here too. What do you guys think on the EV trend? And I know in the US, there's discussion about wanting to have internal combustion engines be banned by 2032, or
Mhm.
perhaps not banned, but any new vehicles after 2032 have to either be hybrid or EV. And we've got similar stuff in Canada. What do you think the implications of that are long term for gas stations? Or is there just going to be so many vehicles on the road for so long that this probably isn't going to be a problem for decades?
It's a
Yeah, I
good
don't think it's
question.
gonna be a problem for a while, personally.
Yeah.
And I also think that, even in a scenario where you have EVs, they're gonna have to stop in some capacity, and usually the stops are gonna be for longer. So I'm assuming, these gas stations or convenience store concepts, or what we perceive to be gas stations, will likely eventually have like a lounge area. I have a buddy who owns a rental car lot. They do Turo, which is I don't know if you're familiar with the concept, but it's like a rental car. It's like a Uber for rental cars. You go rent a car on the platform and then go pick it up. Sometimes they'll drop it off to you. And he's looking to do a charging station for his electric cars. And then his wife owns a kind of a smoothie concept. And so he's built out like a little nook for her and then have a little lounge there where his people can go and sit. And if they want a smoothie, they can grab a smoothie. So again, the charging timeline, there's only so fast you can charge a battery, right? At least currently. Maybe there's new advancement in technology that improves that, but I don't know based on the current technology that's even possible to do in a very, very compressed time frame without actually swapping out the battery, which is not necessarily
well, they're not forever. They don't take too long right now. I mean, I think right now you might be looking at somewhere between 30 and an hour 30. For the really long ones. But yeah, I think you're probably fine on a gas station investment for probably another 30-ish years, right? Overall, I mean, I don't even think we're even in 30 years from now, I still think we'll have plenty of gas powered vehicles, as much as the government might try to push for us to try to do it sooner than makes even sense at this point. But in regards to, I think the layout will definitely be different. I agree with you, Raphael, where I think they're going to have to get very unique, where they're going to have to make it almost like destination, like where just a Wawa and building up the culture, the cult like following is not going to be enough. You're going to have to build out it's like the rest stops almost.
Yeah, they're like lounges. I guarantee you there's going to be things that pop up. It's like, oh yeah, you charge your car for half an hour. Maybe there's a little coffee shop in there, and there's like other stuff you can do while you're there.
Cigars,
so it's kind of an experience
bar,
type. Yeah,
But
these gas stations are in great locations, so it's not that the location is going to be unvaluable. Of course, it's going to be valuable. You're just going to have to retrofit it to support additional, charging stations.
Yeah, so plus charging might be 30 seconds in 30 years. Who knows?
Well, if it's going to maintain its standard as a lithium-ion battery, because really, from my understanding of the battery technology, they're just stacking these batteries on top of each other. Like it's just the density of which they're utilizing these. It's just essentially the greater part of the vehicle is comprised of the actual battery itself. So unless they improve the technology to a point where they're not even using some of this, and again, I'm not a battery engineer, so I can't really comment on that, but. As they currently stand today, the technology is just not supportive of that. So
yeah, I have to imagine in 3 decades we're probably going to be at a very different. The dollar trees will be $10 trees.
Mm-hmm.
There'll be a lot of slight adjustments and things that I think will even still be around. I mean, who knows if even retail will be a thing? We'll be in the sky, and retail will be 30 stories high.
Yeah. We need to tag Elon Musk on this chat so he can kind of provide us some context there.
Why don't we talk about retail on Mars? Okay, I think the real question is who's going to be the first investor to buy up some streets and start developing on Mars.
Definitely. Well, I appreciate your guys' commentary there. I'll go ahead and push us to the next article, which is, and I may not have a subscription, so hopefully it works for me. Okay, awesome.
Oh,
All right, Chad,
I think I sent you the free version there.
Oh, nice.
I have a subscription, so anytime I include a link from Wall Street Journal, I'll just include the free one so you can pull it up. So I mean, this is a sad story ultimately, because that ship that crashed into the Key Bridge in Baltimore killed 6 people. So incredibly sad story. But the takeaway in this interesting article here shows that when they built the Key Bridge in the 70s, I believe it was, the average size was of a container ship was 3,000 TEUs, and TEU just stands for 20-foot equivalent unit. So that's a smaller shipping container. Most of the ones that you'd actually see in real life are 40-foot FEUs, 40-foot equivalent units, but they use the TEU. It's just become an industry standard. That's what everything gets measured in, is TEUs. So the ship size when they built that bridge was 3,000 TEUs. As it's progressed now, and you have these Supermax and Panamax container ships, some of these hold 24,000 TEUs. So compare one that was 3,000 to 24,000. These ships have just become so enormous. The one that crashed into the Key Bridge was actually 10,000 TEUs, so still 3 times as big as the original one. But a lot of the infrastructure in the US and globally just wasn't built with these massive container ships in being considered. So they weren't engineered for that. There was no expectation that container ships would grow to the size that they have. And that's really put stress on the entire global supply chain. You've got stress on the Panama Canal because these ships became so large that they actually had to increase the lock size. That's complicated right now with drought and Gatun Lake and some of the issues that Panama's having. Suez, same thing. There's issues with the Suez Canal for geopolitical reasons. But you start looking at how fast the industry has evolved to have these super massive ships now, where a lot of that existing infrastructure wasn't built for that. It really does underscore a lot of constraints and real bottlenecks. The Panama Canal is a real bottleneck in the supply chain, but it really does show that the shipping industry has evolved so quickly, but the rest of the industry, which is much slower to respond and adapt, hasn't been able to catch up. So that's leading to things like that, the tragedy in Baltimore, and then just global delays in shipping supplies as everyone's trying to figure out how to work around these massive ships now.
Wow. I actually had no idea the size of these things. I mean, like this is insanity.
Look at
I
how
mean,
stacking these. I mean, the stacking the containers is unbelievable.
I know it's like the most amazing Jenga formation we've ever seen. I think that what's interesting about these types of situations is like, okay, like immediately people go to conspiracy, right? Which I'm not a conspiracy theorist, so I'm not going to dive too much into it. But it's like, why it like all this type of stuff about the ability or how it's affecting now the cost of literally everything you can possibly imagine, how it's just destroying the supply chain in so many different fashions. As soon as things start getting better at the supply chain, they make an issue. Where this is one of those things where, if you want to get, I'm not going to get political, I'm not going to get all this type of stuff, but it's one of those things where infrastructure and development thoughts for 20, 30, 40 years down the road come into play. Where it's like, okay, now guess what happens to all the real estate right around that bridge for the next 4 years, right? Where it's like that gas station, as an example, right on the corner of one other side of that bridge, right when they come over the other side, is now going to have a 50% less demand, right? Or substantially less demand, right? It's like, how much does that real estate get affected right next to the bridge where all these cars are pulling off? Those coffee shops, those gas stations, those small mom and pop retail stores were like they were relying on people from across the bridge coming over and stopping for coffee or whatever, right? Where now it's like, you got to kind of shift and adapt as fast as possible. Where like, hey, the properties that are being directly affected now are going to be an interesting opportunity for possible investment.
100%. And really, I mean, how crippling is this for the city of Baltimore? It's just really sad to see, because it's going to lock down the canal it's going to lock down the river for quite some time as they start to clean up the debris. And then at a certain point, they're going to have to go through the construction process. So I'm assuming that's going to also affect barge traffic throughout that.
They were saying several years.
Oh yeah. And also, the way we transport, the cheapest ways to transport product is obviously by barge, but also by truck. So trucking traffic along the bridge was, I'm assuming, pretty significant. I mean, this thing was 1.5 miles. This is like a significantly long bridge. It's not a standard, whatever you call standard. I mean, here in Louisville, our bridges are nowhere near 1.5 miles, 2 miles long. But obviously in certain areas that's required.
It was 1.5 miles.
Body water.
Is that what they seriously
said?
I
believe that's what it was. I could be wrong, but I'm pretty sure it was a long bridge. It was not just a puddle jumper. It was a significantly long bridge.
It's a 1.6 mile.
Yeah. So it's a big impact. It's a big impact. And that's one of the things that's really the sad thing. Obviously the loss of life is the most impacted and sad thing about it, but also the existing residents. I mean, it's going to affect that city for a long period of time. And, hopefully over time they're able to bounce back from it, but it's definitely not if you cut off a major line of transportation for a city, especially one the size of Baltimore, it's definitely going to affect them long term. So
Wow.
And not just Baltimore. It's going to affect everything because
Oh yeah.
Baltimore is still a major trade route. So there's a lot of things that would come in and go across that bridge, like you said, by truck. So barge traffic's going to be impeded, truck traffic's going to be impeded. It's probably going to cause some bottlenecks just in the east coast. So that'll cause ships to have to reroute to other ports now. It'll cause trucking companies have to figure out other routes that they're going to run things, and none of those options are going to be as efficient as what was already in place. So it has broad implications for Baltimore first and foremost, but also just trade in the eastern coast together.
In Baltimore, is it one of the bigger shipping ports in the East Coast? Is it not?
Yeah, from a traffic standpoint, I would think New York's port, Savannah, Charleston. I would think that in Jacksonville, I would think that those would be the main ones, but Baltimore's certainly up there. There's still a sizable amount of traffic that comes into that port.
I'm trying to bring it up on my phone of the bridge here in the port, just to understand like how much actual difference is it in time frame. Because I'm curious what the drastic shift in time frame is. Like if you're right across the bridge, which honestly, like I'm looking at it right now. I guess if you lived here, I'm curious like what the the detour now. Like if you have to still go across and like how long that would take if I tried to pin it.
Yeah, and it's amazing to see the impact of a bridge being built and how that can lead to a bunch of different commercial activity in an area. I mean, they built several bridges here over time, and you see historical photos of when the bridge wasn't there, and then all of a sudden when the bridge comes, if you have a 5-year time lapse or 10-year time lapse, this thing just like it creates it's truly amazing to see the impact. And I'm assuming this is going to have a reverse effect for them, unfortunately. But it is what it is. Hopefully we'll be hoping for Baltimore, and hopefully that continues to progress. But all right, so next up is Henry's article.
So I'm going to stop playing with bridges right now. So let's dive into this one. This is interesting to me. I'm a multifamily investor. I have a few apartment buildings that I own, and this is very interesting. Looking into what markets here are drastically getting affected by rent growth, because I'm in downtown. I mean Miami Beach, Florida. I'm in Miami. So Miami, there is so many apartments. I mean, it's just unbelievable the amount of construction. Like for new stuff, how much stuff is on the market. I mean, like these places are competing, yet every single time a lease term comes up, because I talk to everybody around here, I'm always curious, like the amount of money that they try to raise your rent is substantial. I mean, Florida has no rent control. I'm a big fan of no rent control. But I think it's very interesting when you start to look at some of these markets here, looking at what's in the pipeline. I mean, you could see here, this is for, again, 4- and 5-star luxury buildings and the rent growth, which is very interesting. We have not seen this. I mean, please tell me if I'm wrong. I don't know if you guys have seen it differently than I have, but I don't know when the last time we ever had negative rent growth like this before, right? Where
at least recently.
Yeah, last decade or so. Like I'm really, I am unaware of a time frame in which we actually went backwards, right, in rent growth, especially for these types of quality buildings. Where, I mean, we still have a ton of product to hit the market still, right? I mean, if you just go down the list, I mean, look at the amount of under construction units at Austin, right? They have almost 6% negative rent growth, and they still have another 36,000 units coming online, right? Wow. Our completions, they have 20,800 coming up this year. I mean, it's just wild to see how much product is coming up on the market. I'm curious though. What is, for you guys, are you somebody who's still super bullish on rent? I mean, as much as I'm seeing all this, I'm still super bullish on rent over the next few years. I still think rent will start moving in the right direction. Will start still going up. But I think we're going to be on a heavy plateau for probably the next few years while the interest rates are high.
Yeah, and wages have to catch up too. I mean, wages are starting to normalize. I mean, I think the biggest thing is this is 4- and 5-star product. So we're talking probably in Austin in particular, and some of these other markets, we're probably talking, for a standard 1-2 bedroom. What do you pay? What do you pay in Miami for a 2-bedroom apartment? Like $5,000?
Yeah. So typically what I'm seeing is like $2,000 to $4,000, depending on quality for a 1-bed. Call it 4 to 4 to 10, 4 to 15 for
Yeah.
2 beds.
So 4 to 5 star products. So really, you're probably looking at the upper echelon of that, if I
Yeah.
had to guess. I mean, if you're talking newer.
No, 4 or 5. I mean, look, there's some 1 bedroom product for 15 grand a month out here in Miami. And it's just stupid.
Yeah.
Yeah.
So, I mean, at a certain point, you run out of people who can afford to pay that. I mean, it is what it is. I mean, I mean, you have to be making well over 6 figures to afford a $4,000 or $5,000 a month rent. And so, if the jobs aren't available to support that, and granted, right now interest rates are higher, so the possibility to buy a house, particularly in these higher cost markets, it's very difficult for a lot of people to get into new homes nowadays. But at a certain point, there's a balancing act, because if I make, let's call it 100 grand a year, and I'm in an apartment that's $5 grand a month, I mean, that's like 60 grand. I mean, you can't afford that. So you might as well go down to the C class product, or maybe a lower B class product, and maybe pay a little bit less. So,
well, $4 grand a month, if you play what is it called? The 1/3 rule, right? When you're qualifying somebody, you got to be making 3x the monthly rent. So that's $12,000 a month, $144,000 a year gross to qualify for a 4K unit. I mean, it's just crazy.
Mm-hmm. Yeah, Chad, what are you seeing in your market?
Yeah, I mean, I think that's fairly consistent. Like, I think that this is probably on the higher end, like you mentioned, where it's not indicative of the market as a whole. But I do think
that is for sure. I agree with that.
But multifamily has stagnated. Like, you're not hearing many stories of actual rent growth. If anything, there's pressure, or maybe perhaps even some downward pressure on rents right now. And what I'm really interested in following is all these investors that syndicated deals and how aggressive they got with their pro formas, because I'm sure you guys see this all the time as well. Like, you get a eyes wide open, a really aggressive investor who wants to scale, and he paints this rosy picture, and he goes and raises money through a fund or just through a GPLP model, buys a bunch of property, gets everyone excited, but his pro forma is probably anticipating a certain amount of growth, and his pro forma probably didn't include interest rates going up, or at least staying where they're at. So you have that double, and so actually 3 pressures. You've got pressure on your rents, or at least you're not getting that uptick that you'd probably hoped for. You've got pressure on your interest rates, on your debt, and then you're probably getting upward pressure on your expenses. Property taxes, insurance is problematic right now. Everything has just become more expensive. So what I'm really curious to see if we're going to see some distressed sales this year, just because investors were way too bullish on their expectations on revenue and too dovish on their expenses. So that's what I'm really going to be curious to, is there's just so many investors that are over leveraged and had too rosy of anticipations.
Yeah. I mean, it's already, I actually have a couple friends of mine who are already taking full advantage of that and getting fantastic deals where they just have to come in and take on an assumption, right? I mean, they're basically getting for the debt cost that these people were in it for, because, they were over, way over their heads with their purchase and the equity overall. And the properties aren't worth what they thought it was worth anymore. And they have good relationships with those local banks. So yeah, huge opportunity to basically take advantage of what very unexperienced syndicators were trying to do, not realizing that, hey, rents don't always increase. So definitely a good point there.
Definitely. All right. So next up is a BizNow article regarding everyone knows elections impact CRE, but does the data back it up? So I know we've talked about it a lot of times where people say, oh, this is an election year, and because of this is what we think is going to happen. And so this article kind of tackles that question and sees if there's actually any discernible impact. And what they found is that there's really no indication that because of an election year that, transaction volume in the commercial real estate space increases, decreases, or does really anything outside of a standard deviation, essentially. So, I think part of this article is they kind of talk a little bit about, the impact of some of the things that have happened in Congress. This is obviously on the U.S. side, but really the biggest impacts, understandably, are ones that are directly tied to the real estate space. So they talk a little bit about the Opportunity Zone law and how that potentially impacted and created opportunities for development in a variety of different blighted areas around the country. So that obviously had a significant impact in people's willingness to invest dollars in those types of areas. Capital gain tax reform was also a big driver in the space and led to a lot of people being willing to sell property so that they could replace that capital elsewhere and not incur as much on the capital gain tax side. And really just, a variety of different other factors related to fiscal policy in particular that obviously benefited the commercial real estate industry. So the moral of this particular article was that, no, there isn't any discernible impact from it being an election year and how this is going to impact commercial real estate, but policy is really what drives it. So, that's kind of the gist of the article. So I figured I'd start the dialogue here. I know it can get
well.
Yeah, I'm happy to jump in first, being outside of the U.S., so I could talk to this pretty objectively. I wouldn't vote for Biden if I was in the U.S. He would not be someone that I support. That doesn't necessarily mean I'm pro-Republican or anti-Democrat. It's just I'm anti-Joe Biden. But even saying that, he's done some great things for the U.S. recently. The CHIPS Act, I shouldn't say for the U.S., for segments of the U.S. have benefited quite well. The CHIPS Act, the Inflation Reduction Act, that's injected a considerable amount of money into the manufacturing space. So that whole reshoring, onshoring, nearshoring trend, that's brought a considerable amount of money back into the US. And it goes even beyond traditional manufacturing. You guys are seeing a ton of EV plants going up, a ton of gigafactories, the battery plants. One that I think is probably the most impactful is semiconductors. So right now, Taiwan basically controls 90% of the high-end semiconductors. They've got a near monopoly on that production. And there's a ton of geopolitical risk that comes with China and whatever they decide to do with Taiwan at some point down the road. That could cause a severe, massive, life-changing for all of us shortage in the semiconductor space. So TSCM, which is based out of Taiwan's biggest semiconductor manufacturer, they're building a huge $40 billion facility just outside of Phoenix, where they're going to try to replicate what they're doing in Taiwan. And that's made possible because of the CHIPS Act and some of the financial incentives that the government's putting in. So I think that perhaps reinforces, or at least in my mind, reinforces the idea that we could always be a little agnostic on what the government is doing, because I wouldn't vote for Joe Biden. I wouldn't support Joe Biden, but I have to support those plans because they've had a tremendous impact on North America. So I've said this to people in the past as well, is you can't control the government. So we can try to be as involved as we can in it. You could try to lobby people and perhaps get people to vote, but the chances of having a meaningful impact to sway something is hopelessly naive. So instead, I think it's just much more productive to spend your time that you'd otherwise complain about politics. And I could complain about Joe Biden. Probably we could devote an entire show to me complaining about Joe Biden. But I do have to recognize that he's done some good things. So instead of me complaining about him or like even worrying what's happened with it, like take that time and just do something more productive with it. Reach out to a client that you haven't talked to in a year and have a 15-minute conversation with them about what's happening in their business. And that 15 minutes is so much better served than complaining about politics to either people that already agree with you, so you're in a little bit of an echo chamber, or trying to convince someone that's not going to listen to you anyways. There's just nothing productive that comes from it. So maybe that's kind of like a full summary of the article, is that there's just nothing comes from it.
And that's what I was kind of hoping to get at through the article, is that at the end of the day, what it comes down to is that supporting policy that it doesn't matter who it is. Like you said, you could have one affiliation one way or the other, but at the end of the day, I'm agnostic to the whole political scene. More so, it's just what is going to support industry in, in our case, the United States, what's going to support industry in Canada, because at the end of the day, the greatest, revelation in my opinion, in recent human history is capitalism, being able to create opportunity for people, to bring people out of poverty. I mean, that in my opinion is what I'm all about, is being able to support individuals who want to make a life for themselves and their families, and getting out of the way of those individuals that want to do that. Because at the end of the day, we're here to provide a great life for our family, and hopefully you're able to do that. And if you're in an environment where that's supported, obviously that's the best thing possible. So
yeah. Yeah. Look, I agree 100%. And I love that you're getting political. Makes me very happy. We agree. We agree a lot.
Yeah, so
I'll go on
once we threw it up, Henry would be like, oh yeah.
Yes. I love it. I love it, man. I love it. Yeah. Listen, I did not vote for him the first time. I will not vote for him this second time. And what's interesting though, is I think that getting Trump in office or not, like not, it doesn't matter of which way it goes. They have so little say on the things that actually drastically affect the real estate world, right? I agree. Like, look, if they're talking about capital gains tax, if they're talking about, things like the CHIPS Act, if they're talking about things that have specific direct possible impacts on what we do, sure. Am I going to be for or against whatever, towards those specific acts? Yeah, but that's not something specific that I even believe that Joe Biden was like, you know what we need to do? We need to, reinforce the CHIPS Act. No, not at all. Somebody else made the decision there. But what I do believe is that things like the interest rates and stuff like that, which again have nothing to do with the policy, like the president, like Trump could have been for last 4 years and for the next 4 as an example, and maybe or maybe not, the interest rates would be the exact same, right? It wouldn't have, who knows, right? So it's not like he has complete control, or the president in general has complete control over that. So yeah, I'm with you. Just, it's like, who cares the president? Like, no, don't be wrong. I care who the heck the president is, but I'm saying don't let it affect the way you do your business, because it's like, it's like blaming the rain because you can't go out and show a property. I mean, like, it doesn't make any freaking sense. Right.
Yep. Well said.
All right. So next up, I'm looking forward to this particular article because, this is something we've talked about on the podcast many times. We're following closely. So I'm excited to hear.
So the next update on this, the next update of WeWork, they're finally getting out of bankruptcy. This is going to be interesting. And what I also thought was also super interesting, they renegotiated all their debt, which was really SoftBank, right? There wasn't anybody else really. But they're coming out of bankruptcy with around 300 locations left. I don't know what the total number was originally, but it says in the second line here, the New York-based company said Tuesday in the statement reached a significant milestone, settling on the fates of some 450 unspecified locations in a move that signals WeWork's months-long process of negotiating with landlords is nearing an end. So, the renegotiation of rents in the case of about half of its 300 sites, with the others not facing changes in terms because they are what a WeWork spokesperson described as a co-star as strong performers. WeWork is also exiting another 150 locations. So basically what I had read here was they basically have rid all their debt, or they have plans to rid all their personal, like the company's debt, not like real estate owned debt, but more so the debt that they own investors. Okay. Specifically SoftBank. And they're going to be coming out of bankruptcy with about 300 locations. So very interesting. And if you look at the very, very bottom here, Adam Newman, the psychopath who put this whole monster together, this man is trying to buy back his baby, his long lost, deranged demon child. He's trying to buy it back from bankruptcy for $500 million, which he basically ran off with anyways. I mean, God bless this guy. What an amazing thing. You build a company that makes no money and you walk away with billions of dollars after it, and now you're going to buy it back and you're going to run into the ground. I'm actually curious, not only to get your opinion on WeWork and what your thoughts are going forward, but also, does anybody have any idea how Flow, his BS company, is now going? I'm curious to understand, because apparently now he's the syndicator. He's a GP on a bunch of multifamily deals, which I'm sure he's going to somehow bring to investors and try to sell it to them like it's a tech company. And we're going to see the whole thing happen again.
Yeah. I mean, buying it back may be a good move on his part. I mean, it may very well be, in a much better cash position now that, they've renegotiated all these different leases. And there are definitely WeWork locations that were making money. I mean, there's no doubt. It's just, they overextended and like you said, they were billed as a tech company when in reality they were just a shared working space. And really, I mean, you got to hand it to Adam Newman. I mean, he took SoftBank to the cleaners, but it is what it is,
Yeah, we ran out of coffee mugs at my office. So I had
Nice.
to go digging through the cupboards to find one, and I happened coincidentally found this WeWork mug. I
Just
agree
in
with,
time.
just in time. I agree with everything you're saying. It was billed as a tech company when it wasn't. There was nothing proprietary about what they were doing. I think that the model could work. I think that they created a really cool brand. If you thought co-working space, WeWork was the name that came up. So they actually did create a pretty powerful brand. And I think if they would have been more responsible and diligent in opening up locations strategically, as opposed to just going into a market and saying, well, we need to lease 5 million square feet here because it's a big market. I think if they would have actually taken a more measured and calculated approach to saying, okay, well, here, now we've hit our demand here. This is a standalone office building that's going to work for us. Let's add another one now. But they just went out, they took all of SoftBank's money basically and deployed it into leases, and Adam owns some of the
private
buildings that he was
jets.
leasing. It's just ridiculous. Like, yeah, he fleeced them good. And to think that someone's going to lend that guy $500 million to do this again, that's just crazy to me. Even if it's worth 500 million, even if it's worth $1 billion, if somebody lends that guy money, we need to see interest rates go to 20% because it's just craziness.
I mean,
yeah, I want to work with the investors who are going to lend Adam Newman of all people money. I'd love to work with that person.
Yeah,
No
I mean,
kidding.
yeah, and granted, I mean, one of the expectations of SoftBank when they took a significant position in the company was rapid expansion. So it was kind of a perfect storm of different events that transpired. But I think we all know the inner workings of things that have happened, and this is all the things that have come out about what has happened even prior to them going and becoming what they were. And granted, we also have to factor in the fact that no one could have predicted what happened with COVID and the impact it would have had on the office market. So, there is a tinge
but I am curious, right? Like if we just call a spade, right? I don't need to spend too much time talking about WeWork and all of Adam Newman's crazy concoctions, but I am curious if COVID never occurred, okay? Things went on the way they were beforehand, okay? Do you believe the same thing would have happened? I do.
Eventually, I think it would have gone on for a while though. I mean, really, I mean, and I'm not comparing
but they were
the two,
losing money hand over fist though.
Yeah, sure, but I'm not even comparing the two. But Bernie Madoff would never have gotten caught if the financial crisis hadn't happened. Yeah. And I'm not comparing the two, so let me be clear about that.
I think we should. I should.
I second that.
Yeah, but again, it's just one of those things where it's like, yeah, there's a trigger event that occurs that leads to this downfall. I mean, I had a lot of friends that were big into Theranos before, that whole thing came out. I had some buddies that really wanted to work for the company because they thought it was an innovative thing. And then all of a sudden the house of cards came trashing down. So
I honestly am just freaking mind blown of all these crazy stories. It all sounds like the Michigas stuff that you hear, like the, what is it called? Man, it's like the Netflix specials that people come up with these crazy things that people follow, like the religious things, and then all this kind of craziness. It's like, how do you end up following something this blindly? Like, it's like, it's like these people, like right now you have crazy inflation issues, you have all this crazy stuff, but hey, if there's some lunatic screaming at the corner that something X, Y, and Z is, some vision or whatever they have in mind, everyone follows their lead. It makes no sense.
I think we all just get drunk on the idea that there's somebody out there that could take a company and 1000 exit. And we look like Elon Musk or Jeff Bezos, right? Like these guys were guys that started in their garage or started with humble beginnings and grew these massive empires. I think everyone just gets so intoxicated with the idea that they found the next person to do it. And they probably looked at Adam Newman and he's cool and he walks around barefoot everywhere he goes and he's got crazy hair. And they're like, this guy could be the next Elon Musk. So, I mean, society, we almost do it to ourselves where we think that just because one guy did it in 30 years ago, that there's another guy that's going to do it right now. And we almost turn a blind eye. I support it. Like, let's get a campaign barefoot, going for you and some
long
PR.
Hair. I got to grow it out.
And talking just cliches every time you talk to somebody, not just cliches. Yeah.
We're going to be disruptors, guys. We're going to be disrupting the market.
We're going to disrupt the industry.
We're going to be the Uber of commercial real estate.
That's right.
All All right.
God bless you, Adam Newman. God bless you.
God bless you. All right. So next up is Prologis hopes.
Adam Newman.
Yeah. Next up is Prologis hopes one day AI will help source its acquisitions. So that's kind of interesting. I'm actually going to be interviewing a gentleman to talk, and I know you have Chad as well interviewed. I forgot his name. I actually interviewed on my podcast. Really, he used to be the president of SOIR. I actually watched your podcast. It was phenomenal, by the way.
Mark Duclos?
Mark Duclos, yes. I had the chance to speak
Awesome.
with him on a different podcast, and I know he's been implementing this, but essentially this, they kind of start the article by defining what the environment they've been currently in. And then Prologis kind of, and again, not just Prologis, this is going to be companies across the board that utilize this technology to kind of help them with their decision-making process. And so they've talked about ways to train models to help them make decisions quicker and more efficiently when it comes to acquisitions. This is something, especially with a company like a Prologis that has billions of data points that they can reference. Creating these technologies that can help amplify their decision-making processes is a no-brainer, and it just takes some time. But so they were just kind of describing some of the things that they'd like to have done, like, and hopefully over time they can incorporate into their day-to-day operations when it comes to acquisitions. And so I don't know, obviously, Chad, you've had a chance to talk to a few people regarding this information. I'm actually going to be interviewing a gentleman who's utilizing AI in his brokerage business very heavily. That'll be over in May. It should be a really good discussion. So I figured I'd open it up to Q&A, or not Q&A, but discussion.
Yeah, I mean, the first thing that I'd bring up on this is that Prologis is the biggest real estate owner in the world. So not just industrial real estate. They own 1.2 billion square feet of industrial space. Almost all of it is warehouse logistics space, but they're the biggest real estate owner in the world. So whatever they do makes news. And I always look at Prologis as a bellwether for what's happening in the industry as a whole. If you have their level of insight and data and access to different markets, and they're all over the world as well, they're just, whatever they do is going to come to the market as a whole. With that being said, I think that there's a lot of companies out there right now that are using AI, and they're using it through press releases like this one just to sound cool. And perhaps it's to make their investors say, okay, that's good, or they're going to use AI. Well, maybe that it's a tool that they use at some point down the road to help give a signal saying, based on all this data that we analyzed and what we see going forward, there's a buy signal here. Maybe. I still think that any investment, especially at the scale that Prologis is doing, they're going to rely so heavily on their internal teams that know these markets intimately. If they're investing in Southern California, which is where they have a good portion of their portfolio, their teams know that market inside and out. They probably also have really close connections with the brokerage community in that entire market. I own Prologis stock as well, so I am a shareholder in Prologis. As an investor, a very, very small one, I don't want them using AI to make their decisions on buying. I want them to use their in-house expertise combined with outside advice from brokers or consultants or whoever it is, and them synthesizing all that information that's available, all their internal expertise and external expertise, and then making the best decision for the company. To think that you could just outsource that to AI and you just plug in the address and some variables and be like, tell us whether we should buy it or not. Like, that to me seems incredibly risky. And that just kind of goes back to that comment that I made, is that I think AI has become a buzzword where everyone's like, oh, we should talk about AI, just because if we don't mention AI, our investors are just going to wonder if we're going to get left in the dust. Even though AI isn't a game changer, at least nothing that I've seen as of yet. It's a tool. It's a very helpful tool, and it can help streamline some things. But I don't want to go on to ChatGPT and have them draft me up a contract and then think that replaces a lawyer. I still want to have my lawyer involved in it. So it can streamline things, can make some things more efficient on a bigger scale, like Prologis, in terms of them going out and analyzing deals. Perhaps it's just that tool, but I would just think it'd be incredibly reckless to think that you could rely on AI to make these complex decisions.
Yeah.
Chad, I'm so happy you brought this up. Okay. Because I've been wanting to do a video on this for so long, which is everyone who just talks about AI, about how it's going to be life changing and like it's all these things. Sure, in a couple years, maybe 5, 10 years down the road, I think it'll be way better than it is today. But like, it's just like a CRM system. Like, why is everybody acting like, guys? I'm just like, imagine if the CEO of Prologis who goes on stage and, guys, we're using Google Sheets now. Just letting you know, we're using Google Sheets. Wanted to make a huge announcement. It's like, who cares, dude? Like, sure, you should use Google Sheets, I guess. Whatever. Like, it's just a stupid thing because all these real estate brokers are going on and they're like, hey, we're an AI-driven real estate brokerage. What does that mean right now? Because I have yet to see a AI platform that beyond helping me send emails automatically, maybe texts and a couple auto digi sign, blah, blah, whatever. What the heck are you using AI for right now? Please tell me. Creating stupid images of dogs riding jet skis and in whatever. I don't know. Like, what are you using it for in this industry? I'm so freaking curious what everyone is talking about in it. And by the way, if you guys are watching right now and you have an AI platform that has absolutely changed the way that you're doing your real estate business, comment down below. I will literally take the time to analyze it, buy it, whatever, and do my own take. I'm very curious to see if anybody has really found something because I have yet to find anything. And I've tried a bunch other than something like Air AI, which helps you make cold calls, which, they say they have this crazy, ridiculous conversion ratio, but there's so many people using the server that you can't even make a call. So I don't know, so I'm very curious. I think I'm just like you, Chad. I think it's the silliest thing in the world for right now,
Yeah,
and people are just going to throw money at it for nothing.
We're still in the early phases, so there's a lot of testing
early
going on with these different processes. And I know in your interview with Mark Duclos, he had mentioned that he's like testing different things out. You just kind of figure out how to incorporate in your business, and it's a very explorative process. But the idea that something like this could benefit you is definitely a reality. Now, regarding Prologis, obviously, they're not going to rely completely on making a decision when it comes to just plugging stuff in and then hoping that what it spits out is actually going to be the best decision possible. But it can be a great tool, like you had mentioned. I know Ray Dalio at his Bridgestone Advisors, they have incorporated not necessarily AI, but they've incorporated modeling for making decisions when it comes to buying stocks and bonds and everything else in their investment company. And they've been doing that for like decades. They started back in the 70s. So imagine being able to have a model that you incorporate data into over and over and over and over, and you have billions and billions and billions of data points. I mean, that's going to make it so that obviously with someone that understands how to interpret that data and how to input data properly to be able to support the logic, that is going to benefit you in your speed to market. Because really that's what we're trying to do, is like, you still have to have humans making decisions, but if you can outpace your competitor by a factor of 2, that over a 10-year period is going to, that means you're going to crush the competition. And it could very well be just even a marginal increase where it's 10% or 5% or whatever, but over a 10-year period, that's
I agree with that. Like, listen, like I'm a huge fan of the modeling, right? Like I've built out incredible underwriting spreadsheets like that are ridiculous to the point where like I'm trying to have it set up where I can be to almost the month or the week of how long I would have to hold an asset, right? Of where I would actually have the highest IRR, right? Of like, instead of saying like, oh, over a 5-year period, my IRR is 15%, 20, 25%, whatever. I want to find out what week of what month of what year if I sold it during that period of time, I would have the highest IRR, right? By any significant margin, right? And maybe there is, and maybe there isn't, right? And where I can see where my diminishing returns are. If I hold it any longer than this period of time, I know my IRR is only going to go down, right? I like modeling, right? But like, please tell me where, is there a way where I can plug something into an AI, an AI, whatever, that's all of a sudden going to give me that? I would love to know. What am I not using? What do I not know about?
Yeah, and that's the build. That's the experimental factor right now, because you can build, you can have your large language model in the back end supporting all the data you're inputting, but at the end of the day, you have to be able to show, create the system that would support that. And so that's, I think maybe the starting point. There's just a lot of starting points right now. A lot of people are starting to figure out ways to what the utility is. Just candidly with you guys, I'm translating all my books into Spanish using AI. And it's going to be all audible, because I speak Spanish, but again, going through the process of going through this, the audible and reading and all this other stuff, it just takes forever. Where there's actual platforms out there. Actually, Rod Santomassimo recommended a few to me, and so I'm just going to be leveraging these platforms to convert it over. And now I can convert all the books that I've written into Spanish, and it's going to take me 2 weeks versus God knows how many months to get it done. So
is there, by the way, and again, before we jump off this topic real fast, and I know we're coming up on almost an hour here, but is there an AI platform that either one of you are using right now that you think is unbelievable? I know we talked about Placer AI, Raphael, right? I know we talked about that one, and it looks fairly, it's decent, right? Like I obviously don't have the super pro version or whatever, but anything,
I guess it depends on what you go ahead, Chad.
I've had the pro version of ChatGPT pretty much since it's come out. So I was a pretty early adopter of that, and I like to use it. I tinker around with it, but I found that it just speeds up tasks. Instead of me having to give it to somebody else to do, or me doing it myself, you can generate like a really quick email, or you can generate a summary of something. But it's not, that to me isn't mind blowing as a lot of people are making it seem. Like one cool thing that you could do is write a 500 word essay on the state of the commercial real estate market, and it'll pull something reasonably impressive together. But it's not developing necessarily anything new. It's a large language model, as you said. So it's taking all the information it's been programmed with, all the sources that it has, and it's trying to create something out there. But I also fear that as it gets more and more used, then it becomes very almost standardized, where I can tell if something's written by ChatGPT now versus if it was just written by a person. Or at least I think I can. Maybe I'm naive, but I think that I can, because it comes across very calculated. Like it doesn't have flaws in it. It doesn't have errors. It doesn't have like little mental mistakes that come in. It's almost like perfect language. It's perfect report that comes out. It's a perfect essay that comes out. As opposed to when we all write, we just have our little idiosyncrasies, and we have little mistakes or little different ways that you say it. That's gone. There's none of that in artificially generated anything. So I don't know if that ever changes. And to me, once you strip that away, once you strip past it being able to create simple documents or create text on something, I think the language one is a really key one. That's probably, in my mind, the most impressive feature of AI right now. But aside from that, it's still underwhelming based on how, and underwhelming in the sense that it's being pushed so high right now that everybody talks about it being this absolute game changer that's reforming the way that we do everything. And it's been built up. The tires have been pumped up so high that when you actually really break it down, I'm with Henry on this one. I don't think it hasn't significantly changed my business. I still talking to clients. I'm still out touring properties. The majority of my business is the exact same. So I'm skeptical that in the near future, it's going to really do a whole lot. And I originally had big expectations for it. When it first came out, I thought this was going to be a game changer. I've just tempered my expectations based on exploring it pretty heavy detail. And I'm with Henry. If somebody does have something out there that I haven't seen, I'd love to hear it too, because I would love to free up time or be more efficient or more productive. And if AI could actually meaningfully do that, I'm willing to pay money for it. I just, like Henry, I haven't found a whole lot that's blowing my mind.
Yeah, no, and I think I agree with you guys as well. And I'm again, I think what it comes down to is being aware of what's going on around you and trying to experiment here and there. But at the end of the day, it's not going to change the day to day of what we do, because again, our business is people to people. We're business to business, and it's just going to continue to be that way. So I'm going to go ahead and share one more article, and then we'll kind of go from there.
Love it. Yeah. So, okay. We talked about office last week, guys. Okay. And obviously we weren't exactly so keen about it. So we brought another one back. I'm curious to get your thoughts on this one. Boston's firm is bullish on the office market and bought one of the largest properties in half a decade in location. So Synergy, some large REIT just acquired this large, if you scroll down, I forget how big it is. I don't know, 500,000, something like that square feet. Yeah, 477,500 square feet. And they bought it for $78 million. Do you believe? Okay, now if I remember reading this correctly, I believe they just they assumed the loan. Okay, if I remember correctly. And if you read into this, this is Clarion Partners who bought it before in 2005 for freaking 122 mil, and they bought it for 78 million. Right, so they got a decent discount, and I think it was 83% occupied. It says by mix of financial, insurance, professional services, healthcare, blah blah blah. They have 7 million square feet of office right now. Is this like, and again, you guys are brokers. I know you guys both own real estate. Are you ever trying to throw 80 million into an office building right now? If so, why? Why on planet Earth is this investment company doing this? Am I missing something?
I can't speak for this group in particular, but I know a lot of groups that have to keep money moving. And if they're just sitting on money or they're not making activity, then they're probably not making management fees. They're probably not keeping their shareholders happy. There just always needs to be that money flowing and churning. And that's probably the case here, is my guess. I have so little interest in office space that there would be a price that I would be interested in office though, but it would have to be so cheap, like 10 cents on the dollar on what it was priced at pre-pandemic. 10 cents on the dollar, I would start looking at office again. I think that there's always going to be some demand for office, right? Like I'm in an office right now. I know a lot of people that are in offices. I think that there's always some demand for office, but it's significantly diminished from where it was pre-2020. And I think it only goes down from here. I don't see growth in the office space. If anything, it's going to be continued contraction as technology and worker appetite to want to work at home and the ability to do it from home. Whether or not it's productive is a different conversation, but there's a lot of appetite to want to work from home. So as these companies come off their 5-year leases, their 10-year leases, they're going to be negotiating on their rents if they even stay or if they keep the same amount of space. So there's probably going to be a lot of pressure on companies downsizing, and then there's already a huge amount of vacancy. So you're going to get a steal of a deal, whether you renegotiate with your current landlord or try and go to another space and get the incentives. Like the price just have to be so crazy right now for it to be appealing to me.
Yeah, I mean, it's kind of a catch-22 for me because this is obviously a prime location. I mean, it is right downtown Boston, and you can't replace that type of real estate. And granted, it is office. I understand that, but
I'm looking up the price per square foot right now.
Okay. You're looking up. It's like 180 something, maybe.
Yeah, let me see.
170, 180 a square foot. Which again, I don't know what type of rents they're paying in downtown Boston. I imagine they're not cheap. 163. Okay. So
crazy. I guess I get that, but still, it's just like, you got to convert into something.
You could, but it's 80% occupied. And it's in downtown Boston.
Now.
Boston has a lot of industry.
Now, exactly. No.
Well, you're right. No, 100%. And it could very well drop off. But if you think about it, let's assume that when they bought this in 2000, when they bought this in 2000, late 2005, let's assume the property was 90% leased. So, based on what they bought it for at that period of time, they're getting a 40 to 40% discount on the actual price. So even if they were to lose 10 or 15% of the existing clientele on site, maybe it's still a worthwhile investment. And, maybe there is an opportunity to explore some type of conversion or redevelopment. I don't know. Obviously I don't know anything about the building and how the floor plates are set up and, if there's any other, potential play with the space. So it's hard for me to know. I will say we did have a property trade here in Louisville back just relatively recently. It was a 350,000 square foot building. It was a Fifth Third is a regional bank here that had their headquarters there, and it was sold or bought in 2001 or something or two for $32 million, and it traded at $7 million just last year. So these new guys, and it's like 40 or 50% occupied. And these new guys are coming in it's an Indianapolis firm. They're coming in, buying the building, putting in another 10 or 15 million into updates. So they're bullish on it. I mean, if you ask me, somebody, you guys, like, that's a pretty scary endeavor for me in particular, because I know the condition of downtown and currently where we're located. But in Boston, I mean, it's still a very vibrant city. I mean, it's a little bit different, I'd say, of a market.
I'm not saying don't buy in Boston. We like Boston as an investment area. Just why on planet Earth would you buy 500,000 square feet of office?
Yeah.
Like, oh my goodness gracious. I mean, look, because then there was another article, which we don't have to go into, but it just talks about another 1 million square foot building that's selling. I mean, that one, Class A office building that sold for $80 a square foot. You can't build a fraction of that building for $80 a square foot. Class A in a fantastic location. God bless. But still, what do you do with it? I don't even know, like, who. It's like, I just don't see the demand. Unless you're Adam Newman and you can speak in cliches and sell the world on getting into office buildings again, I'm just not about it.
I'm pretty sure before the deal closed, they called up Adam Newman and pre-leased 20% of the space.
Makes sense. I mean, Adam, we'll give you a sweetheart deal. But listen, guys, this has been fantastic. Any last closing remarks before we rock and roll for today?
No, man, it's just always good to see you guys every week. It gives me an opportunity to catch back up with all the different people that I like and respect, and it's always great. And it keeps me up to date too on national trends, because I get to read these articles and learn from you guys. So always great to see you.
Likewise. And I'd say if anybody has articles that they want us to comment on, shoot them over too, because I'm always interested in, just like you said, Raphael, is hearing different opinions and seeing different articles. So if there's something anyone else wants us to take a look at, I think that'd be great to have that communication back and forth too.
Yeah, and if there's any other guests you'd like to have us bring on the show, I would love to have somebody who's very bullish on office come on the show and have them sell us on the idea of investing in office buildings with them.
Yeah, top office, bro. We'll hit up Bob Knackle. I'm sure.
Or maybe we get Adam Newman to come on the show. If you have a connection to Adam Newman, we would like him on the show and have him interviewed.
That would be fun.
I think that would be a great time. I mean, I wouldn't invest a single dollar with the guy, but I think it would be a good time. Anyways, guys, I appreciate you, everyone tuning in. This has been fantastic with you guys. I appreciate everybody watching. And other than that, guys, we'll see you guys next Wednesday. Take care, everybody.
That's good. Take care, guys.